Hey guys, welcome to Parabolic Signals, where we measure time forecast turning points in the market for you guys to ladder in positions, take profit when you see the green candles and buy the red ones. I'm going to show you guys how to trade these candles inside the VIP so that you can choose to either on the 32-minute here on the right kind of scalp trade. It's more of like a day trade. You can do a swing trade on the 128, or you can do a long-term forecast on the 512. Our specialty here is time forecasting. Time is arguably the best way to measure and forecast the market. There's a big difference between support and resistance, and all sorts of other indicators in order to call the market. Forecasting is by far, out of the years of experience I've had trading, how to look at taking profit. And what you're going to find is that there are specific time cycles and specific turning points that we use in order to call the market. In a weekly structure, you will find that there are, and we're just going to pull this out here. We're going to look at the 32-minute first. Okay. And we're just going to squeeze it together so that you can see what a typical cycle looks like. Now, there is this wonderful way of looking at a sideways market, an up cycle, and a down cycle. Something fascinating that you'll notice in the charts is that you have exactly 5 highs and 5 lows in a cycle period. So if you look at these dotted lines, these are calculative measured cycles between the exact highs and the exact lows, and you'll notice that it is very, very consistent from week to week. So here you have turning point 1, turning point 2, 3, 4, 5, 6, 7, 8, 9, 10, and again for this cycle, and it will repeat it for this cycle as well. Okay. So that you know, a forecast is not finite. Okay, but what I will do is show you how to trade this market and correlate the market so that you can exercise a healthy trade or an unhealthy trade. Right now, we are at what is called a very big bottom cycle low period. And what we're looking for as traders, and remember, as soon as you start investing into any type of cryptos or stock markets or whatever, you automatically become a trader and you're looking to trade for profit. And so these signals are meant to help you with this. So if we look at this, the 32-minute, what we're trying to identify is trend. Now, in a sideways accumulative market here, you'll find that sometimes trend can what's called deviate. But as long as you are maintaining a certain structure, and what that means is when you're looking at a trade, you're looking at your highs, your lows, your higher highs, your higher lows, and sometimes what you find in the cumulative market is that it'll be a little bit tougher to identify trend during the turning points on the kind of the scalps. So the only way to really help solidify is to identify the higher time frames. Now, we're going to just take a quick look at the 128 chart. And again, what you find is that in this particular cycle, you have a high, a low, a higher high, and then a lower low in this cycle, a lower high, which resulted in a downturn. And should you have taken this trade, say from turning point 5 down to 8 and shorted the market, you would have been in quite a bit of profit there. And again, it works the same direction onto the highs. And I, again, will show you my forecasts. And if you don't know anything about WD Gann, he's arguably one of the ones who discovered how to forecast the market using time cycles. So what you'll see here is that price is just sitting sideways, okay? And I will help show you guys much larger time cycles, which are the most difficult to call, okay? In order to, look at laddering in positions in the low periods so that when we start to spike, we can start to take profits at the higher, when the green candles come. Here you can see that we've got turning point 8, 9 arrived higher than 7, 10 arrived higher than 8, and so on and so forth. 1 arrived higher than 9. So we are in this particular cycle, an uptrend. Now, when price decides to slam down, and we can't identify trend because it's moving sideways, it appears that the market wants to move up. Again, we have to look at another higher time frame in order to kind of correlate what that looks like. Now, ever since this 69,000 region, we went into, basically a 4-month down trend, to which I see the market wants to start to curl up into an uptrend. And it's obviously my job to make sure that you guys see what the cycles look like, including your altcoins. So when we are trying to take a trade, we can look at one important thing, and that is, what is the dominant trend? And the dominant trend says right now we are in a sideways accumulative market. Okay, and during these time frames, I will identify whether or not we are still in a bull market or a bear market. Again, much more difficult to call, but I use other data sets to help me call the markets. And right now, if I look at the entire altcoin market, we are at a big cycle low period, to which we will maintain now an uptrend period, so that we can trade the candles. Now, again, I'm going to explain a few things to you guys so that you can get the core concept of what that means to make a healthy trade, so that you guys don't get either wicked out. I do believe that these wicks that suddenly go sharply down are very manipulative wicks, in order for the bigger so-called whales or institutions to take their profits. There's nothing wrong with that. That's their job. And we are here to identify it so that you guys can trade. Now, one very important thing that you have to understand, a lot of people want day signals or they want swing signals. I will show you, and you will have the live on this Zoom call at all times. And you can see that I will be adjusting my forecast as I go. But one key concept that you have to learn as a trader, and a lot of people get this wrong, I don't know why, but you can call it FOMO, you can call it lack of education, you can call it whatever you want. The whole idea behind cryptocurrencies or any stocks is to buy the red candles. You never, ever buy the green candles. Your job as a trader is to sell out into the green candles. That is just a core concept that most have to exercise in their mind, that when they start to see their candles rise, it's time to take your profit. It seems basic, but a lot of people get that wrong. And that is what I would argue to say the crux of how the retail market make mistakes and FOMO into the candles because they believe it endlessly goes up. And then what'll happen is that their price of education during a cycle is to hodl. And during that hodl process, they could have easily making 2 times or 3 times their money in a very short time span, especially for cryptos, because cryptos are extremely volatile. This is a very young market. I have said for at least the last year or 2 years, even from 3,000 to 64,000 Bitcoin, that we are in no bull market. It just appears to be a bull market. I'm going to talk to you guys about tokenomics, market cap, and other things, not just selling into your green candles. Okay. But there will be specific levels to which you can watch for that I will identify that you can sell when you've bought the red, sell into the green. And the way that you ladder into positions in the red is how you ladder your positions out into the green candles, because the green candles don't last very long. There's a lot of market FOMO. It happened in 2017. It's happened in 2020 since the COVID drop, and it'll happen again. And the cycle will just repeat itself. There's really no other way to describe it, because what you find is that people bought Bitcoin at 70,000 and are now stuck. So what you'll see here is that a lot of the people that have now hodled, either one made the mistake of selling the bottom, okay, and or they've held through this process, and when the market goes green, they won't sell out of it because they think that a bear market won't come. It absolutely will come. And I'll be the first one to call this bear market and make sure that you guys don't get wicked out, because these Bitcoin and all the altcoins, as you know, in a bear market can suffer up to 80 to 90% downside. Even Bitcoin is not immune to that. So again, your job is to identify the red candles, invest. You can choose to sit through a 2-year cycle, a 4-year cycle, or an 8-year cycle. And during this whole process, everybody gets really antsy because they see a lot of people making money, yet they can't stay patient. This game, to which I want to teach you guys to trade, is immensely a big patience game. Your time will come where you'll be able to invest incredible lows in order to go through an entire 3 to 5 year cycle, for example, and see a bull market and trade out of your candles. Or if you choose to, especially with crypto, is stake your crypto. I'm just going to end this video now and get into detail. I'm going to record another one to look at more in detail what the cycles look like.